All right. Hello, everyone. I'm Erik Brenner, President and CEO of Hilltop Wealth Tax Solutions. Thanks for joining me today. We have a great webinar for you today and a really great strategy for Roth conversions. This strategy, I would say, would be one that a lot of people don't know about. And it's a way to actually do a Roth conversion for less money, so to speak, or less tax, and still be an investment. So this is going to be a really great strategy to talk about. When we think about strategies for clients, there's a lot of different ways you can go about it. Roth conversions now over the last many years have been certainly a topic that we do a lot of them. We talk a lot about with clients and with qualified assets, IRAs, 401ks, and so forth, continuing to grow. That is just a tax bubble that's waiting to happen. So I'm really excited to talk about this strategy. With me today, I got a special guest, Joe Martinez from Vida Properties or Vida Companies. And Joe has got a great product to talk about in the real estate area. So Joe, thanks for joining me.
Absolutely, Erik. No, thank you for having me on. Glad to be here.
Yeah, it's great. So Joe, why don't we jump right into what Vida, who Vida is, what the strategy is, and let's get down to it.
Yeah, that sounds great. Well, I always like to start with, we're here to serve you and your clients and your investors ultimately with this offering. So we're going to dive in today. We'll share a little bit more to Erik's point about our tax advantaged Roth IRA conversion strategy through our real estate development projects that we are pursuing here in Atlanta. We're very excited about the projects, and we're also very excited to be bringing this tax advantaged opportunity to you as investors, your clients. So without further ado, I'm going to go ahead and share our screen and talk a little bit about the fund, why this particular opportunity, why in this particular time in this place, and why it's just a great opportunity to invest with our platform, and a little bit about who we are. So there's my ugly mug on the screen twice. We have a little bit about myself. I head up the company. I started the company about a little less than 5 years ago. We'll be turning 5 in early 2026. And I work with a very capable and tight-knit team, which several of them have been involved in this for a very long time. Personally, I've been involved in this for 2 decades, doing real estate development in various capacities, both for private equity firms and larger institutions. We've developed on the account of some of the folks that are on the screen, to name a few: Carlisle, Prudential, State Farm, European investors, and we've also aggregated capital into funds through an experience I had in San Francisco for a few years. We aggregated funds and deployed capital across the West Coast. We're now based in Atlanta. Vida is headquartered here in Buckhead, Atlanta. We pursue development throughout the Southeast. We're primarily Sunbelt focused right now. Our bread and butter is doing exactly what you're going to see. It's finding sites to build apartments, building apartments, leasing them up, and then ultimately selling those apartments for more than what we built them for, and then returning that capital to our investors, and then continuing to do that. So we just are blessed to do something that we love doing, and we are able to make quite a bit of money doing it. So a little bit about why this particular opportunity, and we'll spend a few minutes on these slides, but Atlanta in this particular moment is, we've been focused all over the Southeast looking for opportunities, but Atlanta in this particular moment is a very great place to be placing capital into apartment communities. We continue to grow. We added close to 70,000 residents this past year. We added significant amount of jobs. We typically add around 60 to 70,000 jobs. This year was a little bit slower with federal layoffs, but we still outperformed most major MSAs. We're now the sixth largest MSA, metropolitan statistical area, to use, not use jargon, but that basically says we're the sixth largest region in the country now. So we are, and we're continuing to grow at a great clip. There was a lot of housing that was built in Atlanta in 2022, 2023. Now there's not a lot of housing that's being built. And that's actually a really opportune time for folks to be investing with us, where we think demand for housing is going to outstrip the supply of housing. So simple economics there. And we have projects that we own the land on that are shovel ready for investors to invest in. And we're, as general partners, shouldering the majority of the risk on getting those projects approved, the loans, and offering opportunity for investors to participate in the returns alongside of us without the risk profile that we do on the general partner side. So a little bit about this shows the Atlanta growth as of 2022 to 2023. This dipped a little bit in 2023 to 2024, but now from 2024 to 2025, we're back up to that 70,000. We've just continued to be consistently at the top ranked metros for growth. Meanwhile, building permits are down dramatically. And so what that's driven, and this is a national phenomenon, is a spike in the cost of for sale housing. And so if I want to go buy a for sale house today with today's mortgage rate, taxes, insurance, and HOAs, you're going to be about a $900 to $1,000 premium or additional cost over renting. So put in perspective, one of the projects I'll dive into later is we have a build to rent community that we're doing as part of one of these projects. And those townhomes go for about $3,600, $3,700 a month, which sounds high, but if you were to rent in that same neighborhood, if you were to own a townhome in that same neighborhood, similar size, you would be paying about $4,600 to $4,700 a month for that mortgage payment and the HOAs. And we're able to, because of our economies of scale, offering that at a much lower rate. We looked across the Sun Belt for opportunities, and we'll dive into the Roth IRA conversion mechanics, opportunities to be able to place investors into this structure. And Atlanta just stood out. We've looked in Jacksonville, we looked at Tampa, Orlando, we looked in the Carolinas, Tennessee, Dallas. We have one of the biggest imbalances between absorption and demand for housing and production of housing. And so as we're watching these trends carry into the end of this year, there is about a 10,000 unit deficit of housing, and that will continue into 2026 through 2028. But we're one of the few opportunities in the Sun Belt where the green bar is lower than the yellow bar. So the green bar being additional units of housing in production, and the yellow bar being demand for that housing. So as that changes, we'll be focused in other cities, but we really do focus on that before we even consider working on a project. And this just carries that trend forward. So we took the last effectively 10 years of supply and demand for housing in Atlanta, and you can see that window of opportunity where all of a sudden the supply comes completely off a cliff. And what happens to rents when that supply dries up is rents tend to increase. And so we've seen this trend carry forward. And if you look at even 20, 30 years worth of data, that's the same correlation, right? So as that supply drops off, we anticipate that rents are going to grow. Now, it's important for you to know that in our business plan, we do not show rent growth during the construction period of our projects. From the time we put a shovel in the ground to the time we start renting those first apartments, we are not planning any kind of rent growth. Now, that's different from other groups. Not every other group does it the same way, but it's important for us to go, okay, what can we build that apartment for today? And what can we sell it for today? And if we can make money without anticipating any kind of growth, that's usually a good sign for a solid single. And we hope that we will outperform that and hit a home run. A little bit about why we're positioned to capitalize on this opportunity. We know Atlanta, we have a strong track record in Atlanta. We find A+ locations and deliver A+ product. So what we do is we do highly designed, highly thought out, differentiated housing, right? We're not building just a lot of beige boxes. It is something that has a sense of arrival, right? We build best in class amenities, and we do it in great locations. And as a result of that and our underwriting, we're able to consistently over deliver. Now, it can't, never can promise future results with past performance, but we have had experience delivering that performance, and we hope to deliver that to you as your financial advisors and individual investors. Again, we have the sites, so we currently own these sites. They're fully approved, entitled. We have general contractors lined up. We have institutional quality lenders and equity partners lined up. And the fund is the remaining position that we're looking to raise, and making very, very good progress. Again, no trending of rents. So today's rents, and we'll dive into this later, but we offer, we think, very, very competitive splits on the profit side. It's a little bit about our partners, but I think this is important. We're working with great partners. I mean, I think we are very focused on our team culture, and we expect excellence from our team members. And we're just blessed to work with some really, really great people. And that goes all the way from the reports that the investors get quarterly and the availability of those reports in the platform where investors log into, all the way through vertically to the people at the property that stand up and greet you when you walk into the front office, the maintenance guys. We take a lot of care in hiring those teams and making sure we have the right teams. Great legal teams that structure our fund offerings, and a national, highly recognized accounting firm and auditor for the fund. So those are really important pieces for everybody to understand is the team, and the quality of the team that we're working with. Here's a little bit about our track record. And the thing I just want to highlight here is this is at the project level. So would focus on in every one of these splits with investors were different because they're all one-off joint ventures. But these projects, annualized return of 22% in our underwriting, we were able to deliver 44%, so effectively double the forecasts. And that was a pretty consistent, obviously that's average. You can see that there's some that we got lower. There was particular high rise during COVID that was delayed substantially. The multiple was great, but because of the delays in delivering that project with supply materials, labor not showing up, we were at a 17 IRR. So that dragged on a little bit longer. And as everybody knows, the longer that time value of money lowers that IRR. But we were pretty happy with the multiple. So if somebody invested $100,000, they would get $184,000 back on that particular project. Erik, Eddie, just want to make sure we're addressing all the questions, but I'll run you through this, and then we'll talk a little bit about the Roth conversion structure. So we offer investors a 10% preferred return on their capital that's invested before we make a dime of profit. So what that means is effectively, if you're investing $100,000, you're going to make just simple interest, right? $10,000 a year that gets prioritized, right? We don't distribute funds until we sell these projects. And the duration is probably about 36 months until we get the first distributions where you get some return of capital back when we've sold the first project. And then about 6 months after that, we will sell the second project and wind down the fund. I'll go into a little bit more detail about that later. But then after that preferred priority return, investors get 65% of all the distributions after that. And I think it's important for folks to understand there are other platforms out there that will talk about being 80% to investors. And that sounds great. But when you ask the next question, which is, well, how much does the fund get from the sponsor? Because a lot of those folks are aggregating capital. We're direct, so you're investing directly into our development platform. There's no fund investor scrape, when you take those two tiers, and then we call that kind of a double promote, where the fund, the sponsor developer gets a promote on the fund, and then the fund manager gets another promote on the fund capital. Investors are only getting about 45 to 50% of that distribution back. We're offering 65%. So we're giving 100% of all the money that comes out of the project through the fund vehicle and not taking a fund manager scrape. And that's important to us because that keeps us focused on doing good deals that are good for our business rather than trying to make money on your money. And I think that's important for investors to understand. This is a little bit about the projects that are being deployed from this fund. These projects are located in town Atlanta. One is near Georgia Tech, and the other one is up in Beaufort, Georgia, near a regional mall called the Mall of Georgia. I'll show a little bit about those in a minute, but it's important for folks to understand the Roth, and we can, take. I'll go through this, and Erik, maybe can help me kind of walk through the dynamic of the way the fund works with
Yeah.
this. But
Yeah, Joe, I think yeah, we'll walk through this, and I think for our viewers and listeners, thanks for that. It's a great kind of foundation as to the real estate and the project itself. And I think about it is, yes, it's an investment, but this really, for those listening, is the opportunity with the Roth conversion, right? It's just not an investment like within your asset allocation. This opportunity here to be able to save tax money on top of having the investment, right, Joe, is how I think
absolutely,
about it.
no,
Yeah.
I mean, it is a very unique investment vehicle, and one of the because it's a real estate investment vehicle, right? That allows us the opportunity to be able to pass this, or offer this tax advantage investment to investors. Not every investment offers this. So I'll step through the mechanics of it, and then I'll kind of talk about why this works. And this has been a conversation that we've been having with, tax, legal teams, and other financial advisors. And this is something that there's a specific form that the IRS requires. And we help with providing the appraisal for that. So let's just step through it, and then we can kind of talk about the dynamics. So if you're investing $100,000 or $500,000, let's just use $100,000 for clean math. You're effectively going to we're going to show you an appraisal that is because of the illiquidity. So when you invest with us, you'll get that money back in about 42 months. And there's no distributions during the development period, right? Because we're not generating cash flow, because all the cash is getting put into the project to build the project. And so the two things: one is the illiquidity of the investment. You won't, it's over 42 months. We get the return of capital in the waterfall, right? So you get paid back in 42 months. Two, because of the time value of money, the appraiser is basically saying, well, it's a discount because you're getting that money back in roughly 3.5 years. So those two arguments from the appraiser's perspective is what allows them to discount the value of the shares. So for $100,000, we just got this appraisal done about a week ago. And right now in this presentation, it shows 40%. We're at 39.4%. So effectively, instead of paying the full tax on that $100,000 conversion, when you go from a traditional Roth IRA from a traditional IRA to a Roth IRA, you would pay taxes on that amount. Instead of paying taxes on the full 100, you're going to pay taxes on $60,000. So
Yeah, and I think, Joe,
yeah.
That as we work with clients, investing using the 100,000 in a traditional. Normally, if you're going to convert 100, right, you're paying tax on 100.
Mm-hmm.
In this case, just for everybody's clarity, that 100 now you're paying tax on the 60, right? and then converting it at the 60, right, with the 40% example. And that right there, which you said in tax savings, you're saving by converting it a lesser amount, and now it's over in the Roth and let it grow, right?
Mhm. That's right.
Get
That's
paid.
right.
Yeah.
Yeah, and that's the beauty of this. For investors that we're going to have basically two conversion windows. One will be for the 2025 tax year, and then the other will be for the 2026 tax year. And so then what we do is, say you're at Schwab or you're at RBC or any of the other custodians, you have your retirement account with them. We're going to report back to them the value of that, and then provide the appraisal as backup. That appraisal will be available in our data room. And so when you work with your tax accountant, you're going to send that, and there's a specific form for Roth IRA conversions that goes to the IRS. And then the value, the net asset value of the Roth is shown in that form and sent to the IRS, and then the tax is effectively less on that net asset value of, say, for this example, 60 of the $100,000. So that's just a huge advantage. And then when we come to turn around and hand back the return of capital and the promoted interest to the fund investors, all of that money is withdrawable tax-free in that Roth structure, uh, effectively 5 years after it's deployed. So let's just say we're going to give you that money back in 3.5 years. You can then take and invest it elsewhere for another year and a half, make a return on that, and then start withdrawing it tax-free after that 5-year period has elapsed.
Right. And if someone already has a Roth, well, then that 5-year period's already maybe gone.
That's right. That's right.
So,
That's a
because it's
great
the
point.
5-year. Yeah. Joe, what's kind of your target on returns? I know it's return of investment 42 months, but what's your
Yep.
target? What's your targets as it relates to overall returns on the investment?
Yeah, right. I mean, well, and it's important before I speak about that. We can't guarantee those results,
Right.
and there's we talked about our track record. You saw kind of those multiples up on the screen earlier. Our current base case business plan with no rent growth during construction, and all the analysis that we've done is that we hope to deliver a 1.6 multiple to investors. So in the case of investing $100,000, it's $160,000 back into their retirement portfolio. That equates to annualized about 17% annual rate of return over the fund period. So that's our base case assumption. We hope to outperform it. We can't guarantee that, but that's what we're hoping for.
Okay. So you would have obviously any investments that are out there can't get their, past performance doesn't guarantee future return, but you would have the, 1.6, and then also we calculate in what the tax savings was, right? Because you had tax savings right on the conversion. So you're able to convert lower and then get more over, versus again, if you just do a conversion, you're paying tax on whatever you convert, and then it grows from there.
Yeah. Very good point.
That's great. Yeah. That and this strategy, that we see from an advice perspective, and of course there are many strategies for those of you that are clients and know, because we're a registered investment advisory firm, we don't sell products, we don't work on commissions, right? And we'll walk through with you, does this strategy make sense? Like any investment allocation, you want to, you're not doing everything in one strategy, right? We're diversifying along the way. But we want to bring these opportunities and strategies to our clients, because things like this are out there and they can be really advantageous for you and your future. So I just want to bring that up. Joe, is there anything else here?
No, I think that's well put. I mean, and obviously, with RIAs, and individual advisors, we work, with their particular client needs. So happy to discuss the fee structure, as it relates to RIA investors. This is obviously, there's a retail group that we're talking to as well. I would say. Speak with your advisor, and let's discuss the fee structure on a case by case basis.
Yeah, that sounds great.
Great. This is a little bit about, ultimately, we care very much about the tax decision, but we also want to make sure that we're deploying capital into very thoughtful deals that we can execute well on. This particular opportunity is located just to the west and north of Georgia Tech's campus in the what we call the Upper West Side of Atlanta. So in the background, you can see the skyline for the city of Atlanta. In the foreground, we are right almost next door to Anduril, the new military robotics facility that was built. Pretty big employment base there, and a lot of the folks that are or kids are going to Georgia Tech, getting masters in robotics and AI, are getting jobs doing that. It's pretty incredible technology. I've been blown away at some of the stuff I've seen that they even publish. So who knows what they're cooking up there that's under wraps. But it's a pretty amazing facility. It has a neighbor. The Works is a regional draw for entertainment, dining. There's a large food hall there. There is fantastic breweries, restaurants, entertainment venue, and that just continues to grow. So that attracts folks from all over the city to come down and do events there. We've got a Top Golf around the corner. And in the foreground is a lot of other projects that have been built with institutional partners that perform really well. As part of our analysis, we look at the rent performance at each one of these projects. We know the owners. For example, the one that's at the very middle of the screen is MetLife. TA Realty owns a project to the left, and EQT Exeter owns the project called The View at the Quarter. So these are all large institutions that are invested. They look at this as a core market to be invested in. Outside of the screen to the south is a project I developed in a prior role that was sold to Equity Residential, was one of the first forays into the market. And so we have taken a very close eye on this market over the past decade, and it just keeps getting better and better. So really thrilled to have another development opportunity in this location. That green dotted line is a new trail that is connecting to the Atlanta Beltline. So walking and biking trail that you'll be able to kind of come in and go to the Works without ever having to actually get in the car. So that's under construction as we speak.
That's great.
Yeah, we're super excited about that. And then this is our Buford project. So we call it Carina. In the foreground, there is a nature preserve that's owned by the county that is basically being developed as a park and an environmental campus. That green dotted line is another nature trail. We're actually building a small phase of that in our project. There's a hotel development site just to the left of us. And then all of the major retail is kind of around us, in and around us. You got great restaurants, a good mix of dining options, a big outdoor lifestyle center as part of the Mall of Georgia. We have another Top Golf that's right across the highway. The project called Town Laurel Crossing recently sold for a really great per unit number. So if we get close to that number on our exit when we go to sell and return capital to you, I think we're going to all be really happy with the performance of that. So we have a recent, we look at what has sold in the market and how much per unit has that sold for. And we want to be, targeting a 20% margin over that. And so we're in that wheelhouse. We've developed assets around this. My partners and I have developed assets that are off the screen, but it's just been in this market for a little over 10 years now, and it's been a perennial market. If you get get onto Interstate 85, you're about roughly 30, 45 minutes to various locations in Midtown. There's major job centers in Gwinnett County, and then we have very good schools in this area. So really, really happy to be bringing this opportunity to the fund.
That's great.
And this just kind of sums up the investment opportunity. It's about a little less than $250 million worth of projects that we're putting together here. The project in Upper West Side called Guild House has two phases. One is the 354 unit apartment project, and then 39 rental townhomes. So investors are investing in that, taking a play in this what we call the build to rent space. And then it's a 332 unit project in Beaufort. The senior loan is they're a very capable bank. One is a Canadian bank. One is a major New York-based life insurance company that's a household name. And then we also have our general partner is putting 25% of the equity capital, the common equity capital, into the project as well. So we have significant skin in the game, and we're targeting that return of capital in 42 months. And then, Erik, I just always like to share, we talk about economics. It's really important to us. That excellence and diligence is really what drives our business. And I've heard this, there's no mission without margin. And so we're focused on delivering that margin and delivering that excellence to our investors every day. But what's important for us too is that in the work that we're doing purposeful work, and we're creating places with thought, with purpose, with joy, places that people say, hey, that's something different. Somebody put some thought into the work that's being done, that there's a sense of arrival, that our leasing team stands up and greets people when they come through the front door, that people are made to feel welcome. I think this is, we call this high touch, high hospitality living. And that's very important to us, is that we work with our management partners is very focused on that. And we've done a lot of work together, and we work with a really great team on the management side to make sure that that's done. And as a result of that, when you celebrate people through the work that you're doing, you are able to deliver a better experience. That means you get better rents, you get more resident retention, and those assets are worth more and they sell for more. So it's just a win-win all around. That's how we look at that. And then through the profits on our side, investors, we welcome them to do what they wish with the profits. We wish that we hope that they are also thinking about philanthropy in their retirement planning. But from our perspective, we're here to serve our community. So we make sure that we put a certain amount of our corporate profits back into the community, so that we're building the community up alongside of us, which in turn, we hope gives us a reputation of doing the right thing and allows us to get access and build opportunities and develop relationships with city officials and public officials in other communities that we're able to come in and work within their communities as well. So just a little bit about the way we look at our business and how we fit into the greater good.
That's great. That's great, Joe. We really appreciate the presentation there. It's given great information about the opportunity, and certainly Atlanta is a great market. So just to wrap up things here, for all of you watching today, a couple things. One is, we don't know if this is right for you. If you're a current client, I encourage you, if you have questions or have an interest, reach out to your advisor. As we're, launching this today or this information session, we're getting down to the end of the year. As Joe said, it's 2025 and then early 2026. So the strategy can be available, but there is a window there. But we would be glad, obviously, to take this strategy or look at this strategy, put it within your financial plan, run your tax projections and see, does it make sense for your situation? And if it doesn't, that's fine too. But if you're not a client with Hilltop, I would encourage you to go to hilltopwealthtax.com. On the website, we've got a lot of great information about our firm and what we do. You can also schedule a 15-minute introductory call. We'll find out more about you. You find out more about the firm, and then we'll see if there's a fit as well. But we want to make sure we, educate people and bring these strategies that make sense. So, Joe, again, I want to thank you
Well,
for
thank you,
taking
Erik.
the time.
Yeah, yeah. Well,
Yeah,
no, thank you, and thanks to everybody watching for their time. We really appreciate the opportunity to talk about our offering, and hope to have the opportunity to do business with y'all. Yeah,
that's
thanks
great.
everyone.
Yeah, great, Joe. Thank you. Thank you, everyone. Until next time, everyone have a great rest of 2025.